For this question is on rental income. We must first understand that the amount that the business received may be different from the amount that is earned. So we may need to do an adjustment. So first we analyze how much we receive, which is here 26,400. And then we analyze what is the adjustment. So we see that at the end of the accounting period on 31st May, there is an amount of 4,008 that was received in advance, which means that I have not earned this income yet. I'm just receiving the money first. So to make the adjustment to record my income earned, I will need to minus 4,008 from this amount that I originally received. Okay, so next, after that, I'm going to show you the double entry. So the double entry for receiving rental income is simply debit cash at bank, because it's by check, then credit the income, rental income. Okay, then the double entry for the adjustment for the receive in advance, since you are going to minus your rent income, you will have to debit your rental income, because rental income debit means minus. Okay, then what do you credit? You credit rental income received in advance. Okay, so then the final value which you calculated to be your income earned, you will have to transfer this amount into your income summary at the end of the accounting period. So you do this by minusing your rental income to reset it to zero, debit rent income, then credit income summary. So next we look at the requirement. What do they want us to do? So the first one, part A, they ask us to prepare the journal entry to adjust. So this means the one that we adjust for 4,008. And then for part B, they want us to calculate the income earned. So this is simply the working that we did at the first part of the analysis. And then finally, part C, they say name the account to which the business transfer the rent income earned. So this is, they are not asking for a journal entry, they are asking for the account that you are transferring the rent income to, which we know that it will be the income summary. So for question 5, again, we have to analyze the income received versus the income earned, because they are different. In this case, the amount that you receive is 740. After receiving this amount, you understand that at the end of the year, you still have 562 remain owing, which means you have earned the income but have not received the money. Okay, so to calculate the income earned, we are going to take 8740 plus the 562. We are recognizing this as the income that we deserve. Okay, so what is the double entry for the receiving? The receiving in check, so debit cash at bank, credit commission income. The adjustment, since we are adding this 562 to commission income, we will credit commission income again, because income is credit plus. Okay, what do we debit then? We debit the commission income owing, so we call it commission income receivable. And then the final amount which we calculated to be the amount earned, we will have to close it to the income summary. We close it by debiting rental income, commission income, debit the whole amount to reset it to zero, then credit the income summary. Okay, so if you look at the requirement, part A asks for all 3 journal entries. So all these 3 journal entries will come in. And then for part B, they ask for the extract of the financial position. So we understand that the amount owing is the one that is the leftover at the end of the year. So we're going to record it as commission income receivable, which we know is a current asset, and the amount will be 562.